3, 2, 1.
Here we go!
Welcome into the open where we get technical. You should have investments in long-term growth. How's it going, guys? I'm Neal. This is Get Technical. I'm not a financial advisor. This is purely for entertainment and educational purposes only, hopefully in equal measure. Guys, yeah, everyone talking about my hair. That's the thing of the day. Should I cut it or should I grow it out? My goal is to have the longest ponytail in finance. I know you know what ponytails I'm talking about if you've been looking at educators out in the space. So let me know. Give me a 1 in chat if you want me to grow it out down to my butt. Give me a 2 if you want me to cut it. Let's go ahead and get the screen up and let's talk about the agenda for today. Grow it out and braid it. Thank you, Global. This guy knows what I'm talking about. This guy knows what's up. For today, guys, FPRX. FPRX. I'm not doing a buzz cut, guys. I'm a balding 31-year-old man. I kind of am leaning toward growing it out while I can, guys. FPRX. Who got in? Give me a 1 in chat if you got in on FPRX. Yeah, boy. Red. Very good. Very good. Very good. Give me a 1 in chat if you got in. Give me a 2 if you don't know what I'm talking about. Next up is my favorite stock of the week so far. Looking for movement on it today. That's why I want to get to it real quick so we can get in. Full disclosure on this stock. I did purchase some during the pre-market hours. Thank you, Berlin. Grow your hair out now. You will miss it later. That's exactly my thoughts. ETF and crypto check-in. We're going to check in on those ETFs, baby. You guys know I like those thematic ETFs. You know, I'm a Kathy Wood guy, Kathy Wood. So we'll take a look at those. Is it time to get out? Is it time to stay in thematic ETFs, or is it time to switch over to something a little more stable over the long term and less susceptible to taking big old dips as market structure changes and markets overall change? Kind of a cyclical thing there. Is oil and energy still in play? If you guys have been watching the show, you guys know what I think about that over the short term. All right. Don't quote me on long-term oil and energy, but you should know what I think about it for the short term. We've got some plays. We're going to check in on some old ones, and I got some new ones. Guest lesson. We've got Alex Cole, former Bloomberg, now the founder and CEO of GoNoGo, which is a patented. I don't know if he actually has a patent on that, so don't quote me on that. But it is a completely unique technical indicator tool that basically looks at charts, bakes in a bunch of technical indicators that I talk about and other people use probably a lot better than I do, and gives you a very simple go or no go signal. So he's going to give us a little lesson on technicals. He's the technical man. He's also a CMT and has done a lot of education on CMT, which is the Chartered Market Technician. I'm pretty sure that's what it stands for. Maybe Spencer, if you can check me on CMT, what that stands for. That's a
that's correct.
Okay, thank you. Yeah, CMT, super cool. That's my dream, is to get the CMT to pass the CMT test. Guys, if you don't know what that is, check it out. And even if you don't want to do the CMT test, if you love technical analysis, seriously look at this stuff. Probably a lot of the people you follow on Twitter or that you follow that are technicians or technical traders, a good amount of them are CMTs. So check out what the CMT is and the learning materials for it. It's just great stuff to teach you the foundation of technical analysis. All right, picks from the chat after that. That's enough of me talking about what we're going to do, and now it's time to start doing it. Let's look at FPRX. Guys. When it goes, doesn't it? Let me close out this Bollinger Band. Let me close out this moving average. Let me close out this moving average. Let me get rid of my drawings and we can just go back to basics. All right, guys. No lines, pure price action. Called this out last week. We had a nice cup and handle. Why is it a cup and handle? Well, let's dive into it. We've got a high point right here. We've got another high point right here. In between those 2 points, we've got a dip. All right. And this is following a large uptrend. Number one, when we're looking at these bullish continuation patterns, what do we like to see? We like to see my paintbrush tool, and we do an uptrend. And boy, was that a powerful uptrend. The bulls are loving this stock. Then when we hit resistance on our cup that we have formed, we had a little flag here. Why was my line invisible? Why is my line invisible? God, it's so hard when it's full screen, guys, because I can't see my tools. If anyone knows how to make the tools appear on full screen, let me know in chat. We've got a little flag, right? We hit resistance. We bounced off of it. We formed a little flag. That's the handle on our cup. Cute little cup. It's adorable. All right. And then what happened? We had what we were looking for, what we were watching for, is a close above this upper resistance slope on that handle pattern. We had that close above, and now we're going up, and the bulls are piling in, and the RSI is getting a little bit overbought, but look what it did previously. All right. We love this stock right now. So let's look at our price targets. I'm going to use the new method that was taught to me by one of the watchers of Get Technical. I'm going to use my Fibonacci extension tool, which is available. Press the star left for tools. Okay, thanks. I'll check that in a minute. I'm going to use my Fibonacci extension tool. First point I'm drawing is at the absolute lowest point of my cup part of this formation up to the highest point, which is that first resistance line. And then I have a third point to draw. That is going to be the lowest point on the flag that followed the second high in the cup, or the bottom of our handle. And when we do that, the first line that we see, this 100% line, is our conservative price target. You can see we're more than halfway there. What if you shaved your hair off the left side of your head along with your right eyebrow? Jerry, I'll consider it. I'll take that in serious consideration. Thank you. Staying on task. FPRX breaking out. Looks like we're blowing off a little bit of steam right now. We've got a red candle, but that is okay. I expect a stair formation up to the 100% line, keeping it conservative. Something else interesting, guys, as you know, we draw a line from the bottom of our cup up to the resistance line. This line is called our measured move. This is how much we expect this stock to go up. Let's draw this right at the low point of that handle and look at it line right up with that 100. So that's our price target. We're shooting for about 26. FPRX still in the running. Next up, my favorite stock of the week's got a lot of drawings on it, so let me remove that stuff. Docusign. If anyone was at the boot camp, I think I talked about this one. Yeah, I did. I talked about Docusign at the boot camp. Give me a 1 in chat if you like Docusign, if you like what you see. Also, this is a very easy question to answer. Give me the pattern that you see on Docusign forming. There are a couple correct answers to this, and I acknowledge that. It was pointed out to me during the boot camp. I acknowledge it. I've seen this chart on pretty much every increment. So we got ones. People like Docusign. What is the pattern that we're looking for? Because we want to break out. We want a big jump. My interest is in having long-term high growth holdings in ETFs with good managers that I can rely on, like Kathy Wood. All right, that's the majority of my portfolio. So my money is working for me. But then I like to supplement that with breakouts and good entry points that I can buy options on or just buy shares on. Cup and handle. Boom, boom, boom. Voodoo. And a bull flag. It's both, guys. It is both. You're absolutely right. So you can do something like this. You can do something like this. Charts are weird, aren't they? Because we can see different things. Maybe that's why technical analysis so often gets compared to tea leaf reading, which is the mystical science of having a cup of tea and then looking at the leafy residue left on the bottom and then seeing the future. So at any rate, I see that Alex is backstage. He's here quite early, like the guitars in the background. Got to say that, Alex. So looking at this from a cup and handle perspective, let's get rid of our flag. Let's get rid of it. Boom. Boom. Trash can. It's gone. Then where did I have this? From a cup and handle perspective, we've got our high up here. We've got another high. And then we've got a little bit of a sell-off at that resistance, right? We've got a nice trend up too. Let's go ahead and draw our U shape. High to high to low. Okay. Looking like a cup so far. Yes, it's okay to have a slanted resistance line on your cup and handle. Absolutely. All right, and then let's zoom out so we can get this in context. This is following an uptrend. We've got a dip and then a return to resistance. And then when we hit this high point, we've got a little bit of a sell-off forming a small handle here. What can I do with this small handle to make this a true cup and handle? I use my U-shaped line at the high at the resistance and then up to the next peak. Cup and handle, guys. Cup and handle. All right, so this is Docusign. Let's set our price targets. Let's talk about stop losses. Let's talk about return potential on Docusign, which, by the way, has earnings coming up on March 11th. That might just be a major catalyst for a continuation of whatever we're looking at. So, Fibonacci extension tool, bottom of the cup, resistance on the cup, bottom of the handle, looking at a price target of about 340. Entry, close above resistance. This is why I've already entered. So if you look at this kind of slope here, we are down a little bit. I'm in it. So my hope is that we break up above this again, since I'm already in this. If I do see it start to break down past this support line, I will probably get out. So that would be a breakdown. So I'm drawing a line right here. I'm going to make it red. If we see Docusign reverse and start to go down past this red line, I'm out. All right. So let's look at the return potential based on my current position. So I got in above this. It was in the pre-market. I think it was about here, about 261. Return potential, 32%. What I will say about this is that the options are super expensive. So typically with something like this, I like to get in the money options, do something very short term, timed based on when I think the breakout will occur. Use the numbers, dude. What do you mean? What else we can look at is Fibonacci retracement to see support. And we can see that from the low to the high here, we are sort of touching this first support line on the Fibonacci retracement tool. Use the force. All right, guys, that is Docu. That's my favorite stock for the week. I expect a breakout. I'm hoping for a breakout. Everything is in support of it. Yes, we're a little bit down today, but I expect good things. Most of the market is a little bit down today. Most of my portfolio is red, but the stocks that we have picked for breakouts on the show are mostly green. Let's take a look at our ETFs. All right, guys. We had a little bit of a sell-off recently. Might have spooked some people out of their longer-term holdings. But as you know, it's about the bigger picture. This is about... Oh, sorry, Susa. What did it... Let me go back. I said this instead of giving a number. I apologize for using a pronoun. Let me go back. So it's week 3, FPRX Docusign. So entered around 259. My price target is 339. And then my stop loss, which actually right now for me is a mental stop loss, which I normally don't do because I'm busy. I work full time. So I like to have an actual stop loss on my brokerage because I can't pay attention all the time. But for this one, I'm going to keep an eye on it. My stop loss is 245, which is just a few ticks below where this handle, the low of this handle. That's it. That is it. Thank you for encouraging me to be more specific. Let's look at our Cathie Wood, our heavily Cathie Wood based portfolio. So guys, we had a little bit of a sell-off, guys. We're a little bit freaked out, but let's look at this in context using Bollinger Bands. If we look at our 20-day moving average, this ETF has been touching the 20-day and then bouncing back up 2 standard deviations, hitting the 20-day moving average, bouncing up 2 standard deviations. We actually have an acceleration of trend if this continues going up without touching this moving average or the mean, as you might call it. So guys, Bollinger Band on your long-term holdings to assess the trend continuation or potential reversal. What we see here, even though there was a little bit of sell-off, we were just blowing off some steam because we had some big growth, right? Okay, what are my continued thoughts? All right, so Sean, you're asking about Saber. I'll go ahead and pull it up. Oh yeah, I do like it. Well, Saber, it broke out. God, it's beautiful. So beautiful. So it broke out. So let's draw Saber. Saber, this one's a snack. Guys, this is a big old piece of cheese. SABR, we'll just take a look at what's happening. I want to look forward though, guys. I want to talk about trading opportunities that are still coming up. So I'll look at this now to placate you. But let's talk about what's happening in the future, because I definitely want to get into cryptocurrency, because if you guys don't know, there's a big old red candle on the biggest coins right now. So let's do what we always do with these double bottom patterns. This is pretty much a double bottom. You might make the case that it's more of a rounding bottom because there's a large percentage differential between this low and this low, but we'll go ahead and treat it like a double bottom. So what I do for that is use a rectangle, and I use the meat of the trading for my tops here. In this case, this is actually pretty meaty. If it was all wicks, I would not go all the way to the top of this. But in this case, I'm going to. Actually, you know what? So what we want to do, I take that back. That is not meaty. What I want to do is go back to the last green candle here that lines up. So let me get my rectangle tool. Boom. And as you can see, that's about at the bottom of that candle. So it's a nice little lineup. And then you see that this previous green candle, I hope you can see this on my screen. I'll actually full screen it in a second so you can see. This previous green candle high is lining up just about perfectly with this high on the other side of the pattern. All right. So this is the action. This is the battleground that we're watching, like vultures above a medieval battle. To swoop in. We've broken out. It wasn't a huge swing up, but it is a breakout nonetheless. Something I want to look at is see if we've got a golden cross, which is the 50 crossing over the 200. So let me just confirm this. Move out, get the 100 out of here. Yeah, so we've got the 50-day moving average crossing over the 200-day moving average, showing a trend change. This is usually a precursor to a trend change, upward trend, looking strong, and then the breakout happens right about here. Beautiful, beautiful breakout. Great call from whoever gave me Saber. I didn't get into Saber. I didn't get into it. Kind of wish that I had. Still room to go on it. Let's go ahead and do our measured move thing. I'll just use my ruler tool at the bottom of this, bring it the halfway line up to where the meat is, and say that we've got a price target for a resolution of this bottom out, the sideways consolidation over time of $17.20. You bought the red candle. Way to go. Way to go. All right, guys, let's talk about cryptocurrency. Wait, I didn't even get to the ETFs. Well, okay. The main thing with the ETFs, guys, the main things with the ETFs is watch them with the Bollinger Band. It's very simple. I'm not trying to get too complex with this one. Just use the Bollinger Band tool on your brokerage or your charting tool. Look at the daily chart and try to stay at ETFs that are maintaining an upward trend above the middle line. The middle line is this 20-day moving average. You want to stay above it. A lot of times the ups and downs in a healthy upward trend are bouncing off of that mean. If they're bouncing up all the way to the top line, which is 2 standard deviations away from the mean, down to the bottom one, which is two standard deviations below the mean, then you've got a more volatile trend happening. You've got a more volatile ETF. In that case, those are buy and sell signals if you want to be active with it. So with something like this, I like to hold it over the long term. And then if I'm piling in, or not necessarily piling in, but if I'm going to enter more, I like to wait to see it touch the mean. Or if it's more volatile, something like QQQ, I like to wait for it to touch the bottom before I get in, because I expect it to then return to the mean, which is that 20-day moving average, or above it, back 2 standard deviations up. We like healthy, zigzaggy steps climbing up on our long-term holdings. Crypto. Bitcoin. Holy smokes. So with Bitcoin, we hit I'm pretty sure we hit a nice price target here. So we had previously a nice descending triangle for entry. Got in at a break. I got in at a break above this slope. If you've been watching the show, you were with me when I drew this. We hit our price target here. Look at this beastly candle lining up almost perfectly with this price target. And then it kept on going. It kept on going, guys. Putting things in context. Let me look at the weekly. Because remember, with all of these big names, with the big 3, everything's a resolution of what happened back in December 2017. We're resolving these big rounding bottoms or double bottoms. All right. So Bitcoin has been a huge grower here. We've seen patterns all the way up, opportunities to get in. Now let's take a look at what's happening. When will the bleeding stop? When will the bleeding stop? Let's look at the daily. Let me close my bands here. The bands were not applying because this was such a strong upward trend that it was constantly changing the overall slope. It was going parabolic. It was curving up. So let's get that out of here. Let's close the Bollinger Band and just look at price and lines. So we've got a big sell-off. When you got a sell-off, guys, what's a good way to kind of get an idea of when it might stop? Are there any technical tools that you can get a good idea with? Yes. Number 1, and the best one is keep it old school. Keep it old school by looking at previous resistance that is now support. We've got a big, strong, meaningful candle here. People sold a little bit after that. This is a very important point. Our sell-off pretty much hit. Actually, if I raise this up even to the wick, our sell-off almost touch this previous resistance line. That's absolutely right. Watch the volume and resistance levels. We're still on sell volume, but it's not as high as it has been in the past. We've still got a day to take a look at this. We don't know what will happen, but we can see that we're getting a magnet kind of pulling it back up. All right. Let's get fancy now. Let's get Italian. Let's get Renaissance. We're going to use our Fibonacci retracement tool. So what is retracement? I've used this, I think one time on the show today, and I've used this in the past. Retracement is when a trend is going in another direction and it's retracing previous meaningful price points or price levels. All right. It's retracing lines that it has already covered, but in the other direction. All right. So when we see something like this and we start clenching our butt cheeks about our holdings, we need to take a chill pill, shotgun a Red Bull, and pull out the Fibonacci retracement tool. All right. So what we're going to do is go to this previous meaningful support line and then draw another point all the way up to our high. Look at this 38.2% line. We got just about down to it, and look how perfectly it lines up with that previous resistance, now support level. We are confirming this level. We are confirming our thesis on this price level using another technical analysis tool. That's what this is all about, using various technical analysis tools, making sure that they agree before we make decisions based on them. If you're going to make a decision just based on one aspect of technical analysis, just one aspect of reading a chart, always use price and then volume. But if you have access to these other tools, they can aid you to give you more clarity and more insight into what's going on. And we look for them to agree before making decisions with our money. All right, so Bitcoin looks like it's got some nice support around this level, bouncing right back up. In terms of growth potential, I'm open to you guys. Drop in chat right now what your short term, not long term. I don't want to hear 100,000. Give me your short term. I'm talking over the next 1 or 2 weeks price targets for Bitcoin if you're in. And while you're doing that, I'm going to switch to Ethereum. We got ETH. A lot of tools will have you look this up as ETH USD because this is currency comparisons. This is Ethereum to the US dollar. Let me know your targets for Bitcoin. 57, 64. Thank you guys for dropping those in. I'm going to get rid of what I have drawn here. So once again, guys, we have the wick for Ethereum dropping down to the wick of a previous important point in time, a previous important price level. Let me make that green because it's a good thing that it bounced. All right. So we know that we had support here. It bounced back up. This is Ethereum. Let's use our Fibonacci retracement from a previous point of importance. I'm going to use this point to see how it lines up, to see if it agrees with the line that I've just drawn. This is retracement going from the low point all the way up to my high point. And we see that just like Bitcoin, the 38.2 lines up almost on the dot with that level. Hey, Brent. Thanks for tuning in. Almost to the dot with that level. All right. So we've got a good agreement between two technical analysis tools. We've got a bounce here. Now let's talk about price targets, guys. That's a little bit more fun. I'm going to use something very lazy, but often effective. Lazy, but often effective. I'm just going to use the Fibonacci extension tool, which is 3 points. It's the beginning of that trend. It's the high of that trend. And then the retracement. right? The retracement is what we just talked about. It's at the support level. 100% is the conservative price target when you're using a Fibonacci extension. So just based on that, we are targeting $3,017 for Ethereum. Let's continue contextualizing this. Let's look at the longer term trend here. What do we got, guys? This is my favorite thing in the world. What do we got? What is this pattern that we see here on Ethereum? It's a favorite around here. Some might call it juicy. Some might call it big and fat. Some might call it a snack. It's a rounding bottom, guys. A big, old, long-term rounding bottom pattern. The longer the duration of time of your rounding bottom, the more powerful it is. And we love this. We love getting in on these rounding bottoms. All right. When everybody else is selling off and they forget about it, that's when we come scurrying in to the alleyways with the flickering street lamps. All right. Going through the dumpsters, rummaging, pulling out pieces of cheese, bologna sandwiches with like one bite out of them. We're going to nibble them up. All right. Rounding bottom, still looking to resolve. How do we measure our profit potential with this? We go to the absolute low point. We use our little fancy dancy line tool and we draw it up to our resistance levels. So we got this big sell off here, the previous high back when crypto mania was happening. And then we've got it right here again. Look at the consolidation happening, hitting this resistance line again. This is our rounding bottom, folks. We take this line and we draw it on top of our resistance, ladies and gentlemen. We draw it on top. And that gives us our price target for the long-term resolution of this pattern. Am I spooked by this sell-off? Hell no. Do I believe in Ethereum going higher? Hell yes. Let me get an amen in chat if you are bullish on Ethereum and cryptocurrency in general, based purely on technical analysis. Do I know anything about the fundamentals or real-world applications for Ethereum? No. But I'm looking at the chart. I'm looking at what the markets are telling me. All right. That's what we do. Price target for Ethereum, 2,787, a little bit below that Fibonacci extension line. All right. Profit potential from this point in time using our handy dandy ruler tool, 80%, ladies and gentlemen. That's Ethereum. All right, guys. I have had enough coffee and enough of my own technical analysis for the day. It is my pleasure now to welcome Alex Cole for our, what day is it? Monday guest lesson on technical analysis. Spencer, Israel, would you be so kind as to bring Alex onto the show? Hey, man.
Good morning, sir. How are you?
I'm doing wonderful. I just really quick, shout out to the Gibson SG behind you, the double cutout. What is that? What's that yellow one?
This one?
Is that a Jackson or an Ibanez?
No, so this actually, this was the first guitar I ever bought, Neil, actually, when I was about 16. And it's a British guitar maker called Patrick Eggle, who I think went bankrupt and came back a few times. But he used to make some custom ones for some of the old British stars in like the 80s and 90s. Yeah.
Your amp is also British. That's an orange. Yeah. There's an orange Micro Terror, if I'm not mistaken.
Micro Terror. Yeah.
Hold on one second.
I wish I was sort of good enough to deserve all the guitars. I just love collecting them, and I play them as much as possible. But
a lot of folks collect guitars. I mean, they can be assets. Let me do something really quick. I want to bro out with you.
I see yours in the background there. What do you got over there?
That's my that's an RG model Ibanez.
Nice.
Yeah, I like to chug. So hold on one sec.
Maybe the micro dock. There you go.
Yeah, my neighbors love me.
Yeah, I bet.
All right, man.
Good stuff.
So tell folks, Alex, a little bit about yourself.
Sure.
And what you can teach them today.
Yeah. So I'm a technical analyst. I worked for about 15 years for Bloomberg, working mostly with institutional buy-side, sell-side traders, PMs, money managers, sell-side research, but all in the technical space. And did I actually for the most of that time I was responsible for the training of all new hires into the financial training program, as well as a lot of external client trainings in technical analysis. And I love it. I love the charts. I was enjoying listening to you there, and I towards the end of my time at Bloomberg, I ended up in a sort of more of a niche fascination, I suppose, of trying to create custom charts for clients and trying to find out what they really look at in terms of technicals, and build tools with Bloomberg's custom study writing to sort of highlight things like that on the chart. And since I've left Bloomberg, I've become this was a few years ago now. I'm now the subject matter expert for Wiley for the prep course for the CMT, which I'm sure your listeners know. The CMT is the Chartered Market Technician, sort of the equivalent to the CFA program for technicians. And now I consult, and I've got my own charting process called the GoNoGo charts.
Wonderful introduction. Shout out to the CMT program. I'm just going to go ahead and drop a link to that in chat.
It's a great program. It's really thorough. It really gives you a thorough education in technical analysis.
Yep. All right. So what I would love to do, Alex, is have you share your screen, pull up a chart, and just take us through some of your picks. And I would also love it, Alex, if you're open to it, if chat could drop some tickers that they're interested in right now, and we can pull them up and just see what you think about them.
Yeah, absolutely. I mean, anything you want to do. I was following along with your crypto and with some of your other charts. I can pull some of those up and talk through them in terms of the GoNoGo charts if you want to start there. And then while we wait for some tickers to come in, we could do something like that. Yeah,
sure. So let's start with cryptocurrency.
Yes. So let me get my crypto. This is Ethereum that you were just looking at, and I guess let me give a 2-minute overview of just what you're looking at here. I'm a big fan of two sides of technical analysis, and one is using really good, well thought out, complicated in some ways tools like studies, indicators. You were throwing up Bollinger Bands, you were talking about volume, you're talking about Fibonacci's. And so I spent a long time getting more and more complex with my process. But then on the other extreme, I'm a really big believer in keeping it simple and using price analysis and looking for support and resistance and patterns, like you brought up some of those as well. And so my sort of problem over the years was, how do you have a really complicated or sort of not complicated, but a really well thought out, detailed technical process, but keep the chart simple. So that's what you're looking at here, really, is sort of my life's work of trying to blend the inputs or the tools of the concepts of technical analysis that I think are really valuable in terms of trend identification and momentum, into a different kind of data visual so that you can still see price and price action. So that's what you're looking at here. So this is Ethereum. The blue shades for me are bullish, so we call those the Go trend. So you've got the bright blue and the lighter blue showing some consolidation and some correction. And then the lower panel is our sister oscillator. So we've got about maybe 12 to 14 concepts in this chart. But it allows us to then, I know the technical picture from all of my indicators and concepts that are in here, but it allows me to do things like you were doing, which is find important levels. Like on Ethereum here, you can call this, when I teach, I like to say that patterns, you can call them whatever you want. Really, they're just the market, underlying market action dictates what you can draw, and it's really a representation of supply and demand. But if you're looking at this as an ascending triangle, you can still draw that on the chart because you don't have too much in the way of multiple moving averages, Bollinger Bands. Maybe people put on Donchian channels or Keltner bands, and in the end your price gets so small and hard to see that it becomes difficult to do this kind of basic technical analysis, which I think is really important. So yeah, I'm pretty much in agreement with you on Ethereum. If you extend this out today's sell-off came right back down to support. So the concept of polarity, what was resistance becomes support, and that's the same with Bitcoin. So if that's an old level I've got on there, but you were talking about this being a triangle. You can totally see that, and a break, and again you've got these prior high Bitcoin coming right back down close towards it, and like you said, the bounce is really positive. To see it coming back towards the top of the bar fairly quickly, that's pretty bullish, I would think. And then just let me go back to Ethereum, because I think there was nice. The other point that I would mention about these charts is just that you were looking for where could we find support, and what would be maybe a re-entry or some sort of signal to get back in if you're still bullish. And to that, I turn a lot to the oscillator. The oscillator is a blend of momentum inputs. And the way that this works, which is hopefully powerful compared to some other things, is that when the oscillator inputs, if you think about a momentum oscillator, you're thinking about RSI, or you're thinking about MACD, even Bollinger, the way it swings between the standard deviations. When those are neutral, right, which is quite normal in a trend, you've got a nice little run, and then a pullback will send those oscillators neutral. The GoNoGo oscillator will crash to the 0 line, and you can use that as an objective level of support in an uptrend and resistance in a downtrend. So as this was consolidating in this triangle sideways, looking to the oscillator and seeing that the support was being found at 0 there was really encouraging. And that's what these green icons are, that I label them as trend continuation or low risk entries when in a trend. So right now, I'd be looking to see what happens as the oscillator gets close to 0 again. If it consolidates for a couple of days in these sort of levels, we'll probably see the oscillator hit the 0 line, and any kind of bounce back up from there would signal a trend continuation icon on these charts. But that's where I would be on Bitcoin, kind of pretty much in line with you on those.
So just so folks might just be tuning in, if you didn't catch it, what Alex has done with his tool here, GoNoGo, is blend in, I'm sure on a weighted basis, all of what he has found over the years to be the most efficacious technical indicators into a very simple single indicator on the price chart and on an oscillator. So cool, pretty cool stuff. All right, so we've got some tickers coming in. Can we look at KALA? Kenny did a little. Here, I'll show these. He did those little cute little things on either side of it. So I want to make sure we look at that.
Yep. So KL, this is Kala Pharmaceuticals. Looking good, and actually cut today, getting a re-entry. So we had a sharp rally, we have a correction and a pullback, which we see those paler bars. We see it come back to the 0 line and ride the 0 line for a few days, and now finding support there is giving us some trend continuation icons. Obviously, we've got the overhead supply at around $10, so it would be nice to see price consolidate and break above those prior highs. And also, the one piece that is also in the oscillator is volume. So when the volume is on average heavier than it has been in a defined period, then the oscillator will be darker blue, and when it's lighter blue, then volume is a little weaker. So we'd like to see volume pick up as well. But this is also, like I said at the beginning, I love traditional technical analysis. One of my favorite books when I first started studying technicals was the Edwards and McGee book, Neal, which I don't know if you've seen, but it's from like the 40s, and it's really, powerful information about how markets drive supply and demand, and how that can be seen on the chart in the form of pattern analysis. And so what I was trying to do with these flagging these situations with the green dots is try to automate how to find things like, and again, they're all slightly different in form, but bull flags, pennants, things like that. So, you could quite easily be looking at this and seeing some sort of bullish trend continuation pattern. Maybe this is some sort of bull flag, but the situation is the same. When this happens, you've got a sharp rally in price, you've got some sort of cooling or pullback, but the pullback shouldn't be enough to drive the oscillator into negative territory, because that would be saying that some of these indicators are oversold, which is a bit of a concern if you're thinking you're in a good trend. It's a bit of a, you want to see heavy buying and then a pullback, and then heavy buying and then a pullback. That's what happens in trends, but you don't necessarily want to see oversold conditions. That's a bit more volatile. Like if you look further back on the chart, we tried to go into a go trend here, but the oscillator couldn't confirm, and it couldn't find the support at 0, and it broke below. So this is now a little bit more bullish. You've got a sharp rally, you've got a pullback, you've got maybe a break of this bull flag, and you've got your continuation icons coming from the oscillator finding support at the 0 line. So that's an interesting chart right there.
What about Vale? VALE.
So Vale is interesting. Vale's had a really nice run. Again, the start of the trend, the sort of the pullback, the bull flag, and then the re-entry. It's a bit more concerning towards the right part of the chart. The oscillator was unable to hold the 0 line. That caused some inability for the trend indicator to maintain the go colors, and we found a bit of uncertainty. The amber bars, Neal, are neutral, often found as a bridge between trends, so they're sort of a neutral directionless color. But it has tried to go back into the go trend, and this is what I would watch for now personally, is as that it's tried to re-identify a go trend, and now it's getting close to the 0 line again on today's price action. So I would watch to see if that 0 line can hold as support, and if it does, that would be a positive. And then, but again, you've got overhead, you've got some resistance at about 19. So if it can find support here, I'd expect price to try to take out those prior highs, or at least get back to them if we can find support on the oscillator at 0.
All right, let's do 2 more picks, guys. The first one I'm going to do is what I like to call a FOMO stock. But of the FOMO stocks, I think this one might still have potential. It's Naked, NAKD.
Yeah, same idea. In theory, everything should work the same way, right? Like technical, I'm a big. I loved what you said about, do I know anything about the fundamentals of cryptocurrencies? And you said no, and I love that about technical analysis. It really is the market telling you what you can see or what's happening. And there's a lot of great technicians that combine fundamentals with technicals. I'm not saying that fundamentals aren't important, but in theory, the price chart should do what it should do. And so you have a similar sort of situation here. You have a break and a consolidation with the paler aqua bars. And then you're looking at the 0 line on the oscillator, starts to find support. And then again, you've got a move up and a consolidation, but you find support at the oscillator, a move up and a consolidation. And right now, again, we're at that oscillator finding support at the 0 line. So with you, Neal, potentially, I don't know, we have to watch what happens, but if it finds support and rallies into positive territory, then you could certainly look for an initial target, maybe to try to get back to prior highs, which on a stock like this is significant return. And the other thing to point out, Neal, is that when you see these trend continuation icons, because the suggestion is that there is renewed momentum in the direction of the trend, you can set very tight stops. So, when I work...
And really quick, Alex.
Yeah.
The trend continuation icons are green circles underneath the bar, right?
Green circles underneath the price bar in an uptrend. There'd be red dots above the bar in a downtrend. But it's based on this interaction of the oscillator with the zero line. So if you're in a trend, momentum should not get oversold, right? So as you correct, it could cool off and go to neutral, but it should find support at the zero line. So that's what these are trying to identify automatically. But because of that, when it finds support at the zero line, you can suggest that momentum has come back in the direction of the trend, so you can set a tight stop. And so that's when I work with traders more so than long-term investors. That's something that they like, because you can easily set a stop. Let's say you see a trend continuation icon, you can set a stop maybe at the low of the prior bar, and so your risk is very small, but you can put your targets wherever you want, but a sensible place on this might be at a prior high. So if you were to get another rally into positive territory, you'd get another green dot, and you could set a tight stop, and your risk reward in that way, even on the ones that go against, like for example on this chart, these would all work out. This one, if you set a tight stop, you'd be stopped out, but you can set tight stops and have nice targets, and your risk reward ratio is pretty good that way. So yeah, there could well be some room to run for naked, but I'd be concerned if the oscillator breaks into negative territory.
So let's do one more really quick, because we're a little bit over on time. TAP. And then after that, Alex, I would love if you could tell folks more about GoNoGo and how they can get hold of it.
Sure. So here's TAP. Not quite such a pretty picture. We had a nice Go trend established back in November. And then one other thing to point out here with the count, the other side of the oscillator are these red arrows. So I'm sure that you're aware and your readers are aware, but an oscillator is designed to look for overbought and oversold conditions. So it's trying to find swings where price velocity has been too extreme. So you can still use this as any oscillator. So I was talking a lot about the zero line, which is that added piece. But if you find an oscillator which is at an extreme and then it comes back, that's typically a short-term correction indication, right? Like if you think about RSI crossing below 70, that's this kind of situation here. And I highlight those with these counter trend arrows. And then you can also, of course, use oscillator divergence, which is one of the most powerful concepts, in technical analysis. So you can still do your normal oscillator and price analysis with the GoNoGo. It's just that I might have highlighted the zero line a bit more, because that's, I think, an extra piece to it. But so on this chart, we had the nice move up. We had some indication that perhaps we were seeing some divergence. And then we had the weakening. And then in here, when you had this, we had the cross below zero. And now we've gone into an amber bar followed by a no-go. So this one now, I'd be looking to see if price, we've also got a gap here, which is very important. As price rallies up to this gap, the gap should become resistance. And if price does rally a little bit, then we'll see the oscillator come up to the zero line from below. And remember, now from below in a no-go, that zero line would be resistance. So we'd watch to see if it finds resistance, in which case maybe price rolls over. But again, that's simplistic, right? You want to look at things in the context of a larger time frame. And if you're if you're getting your market bias from a weekly chart, then maybe you're looking for entries into this. And if we can get back to zero and cross above and see some bullish indication, you'd be looking to go long if your larger time frame bias is a go. So, but there's definitely not the same picture here on this one.
So there you go, guys. Alex.
Yes, sir.
Where can folks find more from you and more from GoNoGo? Yeah.
So the website, GoNoGoCharts.com, is where you'd go. You find out all the information. We have, this is something that's been institutional really only, and something that we've just launched it really this year for everybody. So we have a fledgling YouTube channel, which we've got, we've thrown up with, actually there's a Benzinga presentation on there that we did, I think, in October, Neal. And then some webinars I've done for other things, like there's a CMT summit that I did a webinar for for them, as well as we do a weekly video that explains. We do a newsletter that talks about the macro outlook, from a asset class down to sectors and then down to specific ideas towards the end of the newsletter. So we review that every Friday. I do some shorter videos for like the investing channel during the week as well. So there's the YouTube channel, there's Twitter, Facebook, Instagram, but go to the website. That's where all the information is. There's also a page on the website that explains the indicators in a little bit more detail, some white papers, things like that. But yeah, love for everybody to check out the website.
Wonderful stuff, Alex. Thank you so much for coming on to Get Technical on a super short notice, might I add. I really appreciate it.
My pleasure. Anytime.
You've been a wonderful guest. Have a great day, my friend.
Thank you, sir.
Alex Cole, ladies and gents, GoNoGoCharts.com. Link is in the chat. Check them out. Check them out. Fascinating stuff. Technology is evolving and making us better traders in the process. Let's check in on some of those stocks I've been talking about. Let me do a little screen share, guys. I mean, I'm not going to say that I was right about XOM, but it kind of looks like it. Who here got into XOM? ExxonMobil. We're back on the oil train, baby. Icky stuff, but boy, does this chart look good. What a time to be alive. That's right. Gap to close, and it has closed, folks, on our double bottom pattern on ExxonMobil. What did I do? I bought calls. I bought in the money calls on ExxonMobil, and they increased in value. That's how it works. That's how we do it. I'm going to buy myself a rotisserie chicken from Meijer, which is a regional supermarket chain. All right, let's take a look at Oxy. Guys, remember Oxy? Nice little candle. Not a huge move if you're just buying the stock. But what did I do? I bought in the money calls on Oxy in anticipation of some growth in an uptick at above this resistance line, which is now support. All right. Another double bottom on an oil stock. So tomorrow, give me a 1 in chat if you guys want to talk about options trading strategies for these stocks that we talk about every single day here on, I almost called the show Go No Go, on Get Technical. Give me a 1 in chat if you want to talk about options strategies. And just remember, I am not YOLOing these, not all the time YOLOing these options trades. All right. I try to keep it. This is not about gambling on something. This is about using options for leverage on, in my mind, to me, very well confirmed predictions. And this is not a large percentage of my portfolio. The largest percentage of my portfolio is long-term growth stocks and ETFs. So my money works for me over a long period. Why? Because I want to lease a Lamborghini. Actually, I probably will never. I want to rent a Lamborghini for like a week, drive it around, take a bunch of Instagram photos, and then brag about my stock picks. And this is what's going to allow me to do that. All right, so we'll talk about options tomorrow. Got nothing but ones in chat. Enough of the silly goose time. I want to thank everyone that made it to the boot camp on Saturday. I had a lot of fun. I learned a lot, and hopefully those of you that attended did too. A lot of in many cases, it's both a humbling experience as well as something that's somewhat empowering, because you realize that although the market is very complex and often unpredictable, it's possible to create solid strategies for making money that become kind of simple. So I want to thank you guys all for attending the boot camp. That's what makes that's what keeps us in the biz. I also want to thank you all for tuning in this morning. I have a ton of fun with you guys every day. I will say that I was up late. I was very tired this morning. I almost felt like telling Spencer, just do the show without me. But I pushed through. So I pushed through, and it's been very rewarding. So thank you guys so much for spending time with me on Get Technical this morning.